Alright, so this is the Financial Maths for Leaving Cert Ordinary Level. The book is Texts and Tests 3, the orange book, and its page is 111, and that should go up as far as, let's just check, 124. I'm going to start with income tax and then I'm going to do compound interest. This video doesn't include currency conversions or speed, distance and time or anything like that. It's just the stuff on income tax and compound interest. So, income tax. Some of you probably have jobs, some of you don't, but I'm pretty sure most of you are aware that once you get paid, you have to pay the tax on whatever it is that you pay. So there's such thing as your net pay and your gross pay. Your gross pay is the pay that you get before any deductions are taken out. So if you're getting €10 per hour and you work for 20 hours, your gross pay is €200. That's your wages before any deductions have been taken out. Your net pay, on the other hand, is the pay that you actually take home. The money which has the deductions taken out of it. So your tax is taken out, you might have savings coming over, there could be anything off your pay slip, but that's your net pay. For the Leaving Cert Ordinary Level, we have to know how to calculate the income tax and the universal social charge. So your income tax is basically, you have to pay a certain amount of the money that you earn to the government for the upkeep of schools and roads and hospitals and so on, and that's known as your income tax. And generally it's 20% of whatever income you earn. However, if you earn a lot of income over a certain amount, well then you'll start to pay 41 or 42% depending on what the rate is at the time. So just a few terms that we're going to use here in this section. I'll just type a few of them out just so you can see. There's what's called the standard rate of tax, and that's basically the amount of your earnings that's ready for 20% tax. So the standard rate of tax is generally 20%. And then there's what's known as the higher rate of tax, and that's generally 41 or 42%. The question will tell you whichever one it is you have to use. So higher rate of tax is 41%. So for example, you might earn €30,000 per year. Some of that will be taxed at 20% and some of it will be taxed at 41%. So for example, up to 28,000 might be at the standard rate of 20%, and the remaining 2,000 will be at the higher rate of 41%. So in this case, 28,000 is what's known as the standard rate cut-off point. So you're paying the standard rate of tax up to that amount, and then anything on top of that amount gets the higher rate of tax. And that's why that's 2,000 here, because the 28,000 and the 2,000 combine back together to give you the 30,000. So the question will generally tell you whether you're dealing with standard rate of tax or whether you're dealing with the higher rate of tax. And just remember to split your wages up into the standard rate and the higher rate based on what's known as the standard rate cut-off point. Everything up to the standard rate cut-off point is charged at the lower rate of tax. Everything above the standard rate cut-off point is charged at the higher rate of tax. Then we have what's known as tax credits. Okay, so tax credits. Generally, every person in the country has what's known as tax credits, and it's a certain amount of money. If you want to think about it like this, the government has already paid a certain amount of tax for you. It's like a credit that you have. Just like when you have credit on your mobile phone, you have already bought that credit. It's in your phone, you have it. So if I have tax credits of €2,000 per year, that means when I figure out how much tax I'm due to pay, I can assume I've already paid €2,000 off of it, so I can take the tax credits away from the tax due. So tax credits are, I suppose I can describe it as an amount of money that's already been paid off your tax, if I can spell. So for now, I'll deal with universal social charge in a while, but for now that's basically what we need to know. Our gross pay is the pay we actually get before any deductions have been taken out. The net pay is the pay we take home after all of the deductions have been taken out. My taxable pay, the pay that I can pay tax on, is basically my standard rate on the lower amount and my higher rate on the higher amount. And then I have tax credits which have already been paid for, leaving me with the amount of tax I'm due to pay, which I can subtract from my gross to find out what my net pay would be. The best thing to do is if we have a look at an example of this. So we have a woman here who has an annual salary of €46,000. So we're dealing with payment on a yearly basis here rather than weekly. So annual salary, but the weekly, it's done the exact same with a weekly. It's just the numbers will be a lot smaller. So her annual salary is €46,000. We know that she has an annual tax credit, annual being the word for yearly. Annual tax credit is 3,200. And we know that the standard rate cut off, I'm just going to use SR for standard rate. So standard rate cut off is €28,000. So remember, everything up to €28,000 she's going to pay 20% tax, and everything above that she's going to pay 42% tax, because we're told that the higher rate of tax is 42%. Okay, so we're asked what is her income for the year. We want to find out what her net income is. Alright, so the way we'll start this is we look at her €46,000, and we know that that's split up into two amounts. The amount that will be charged at the lower rate of tax and the amount that will be charged at the higher rate of tax. So remember, €28,000 was the standard rate cut off, so she will pay at the lower rate on everything up to €28,000. So how much of her money will she pay the higher rate of tax on? Well, that's everything else. So 46,000 minus 28,000, so €18,000. So she's going to pay the lower rate of tax, 20% on 28,000, and she's going to pay the higher rate of tax, 42% on €18,000. So using your calculator, 28,000 multiplied by 20%, so you can type in 28,000 multiplied by 0.2, 20% as a decimal is 0.2, tells us that she has to pay €5,600 tax here, but she also has to pay €18,000 multiplied by 0.42 for the higher rate, and that's going to be €7,560. So in total, her tax should be €13,160. These two added together. That's how much tax she has to pay, €13,160. But do you remember that she had a tax credit? She had this credit here. So you can think of this as her already having paid €3,200. So if she's already paid €3,200, her actual tax bill or her tax due should be the 13,160 that we reckon she owes minus 3,200, the amount she's already paid. So her tax due is €9,960. So that's how much tax she needs to pay for the year. We were asked what was her net income for the year, how much money did she earn for the year. Well, she earned €46,000, but she needs to pay 9,960 in tax. So her net income is €36,000 and 40 cents. And that's how we do a question out like that. So I'm just going to go back through that one there so you can see it again. We're told her annual salary is €46,000. She has an annual tax credit of €3,200, and the standard rate cut off is €28,000. So that means her €46,000 is split up into two parts: 28,000 at the 20% rate, and the rest, which is 18,000. And where did I get the 18 from? That's 46,000 minus 28,000. So 28,000, she's due 20% tax on that. So 28,000 by 0.2 on your calculator tells you that she owes 5,600. 18,000 by 42% or 0.42 tells you that she owes €7,560, giving you a total tax bill of 13,160. But she's already got tax credits of 3,200, which means she's due to pay €9,960 in tax out of the 46,000 that she earned, leaving her with a net pay or net income of €36,040. So we'll have a look at another example of that. Alright, this is a weekly example now. So John has a weekly wage of €830. His standard rate cut-off point, so the amount where we stop charging the lower rate and start on the higher rate, the standard rate cut-off point for him is €635. He's got tax credits amounting to €52 every week. And we'll just note over here that the standard rate of tax is 20% and the higher rate of tax is 42%. Okay, in this question we just want to find out how much tax he has to pay each week. So how much tax is he paying each week? Okay, so the €830 is what he gets before any deductions have been taken out of it. So that means that €830, we have to pay tax on that. He's going to pay the lower rate of tax on everything up to €635, but he still has to pay the higher rate on the rest, which is €195. So bearing in mind 635 plus 195 brings us to 830. This is going to be at the lower rate and this is going to be at the higher rate. So once again on your calculator, 635 multiplied by 0.2, which is 20%, gives us €127. And 195 multiplied by 0.42 gives us €81.90. Which means his tax bill comes to €208.90. So that's how much tax he has to pay. But remember, his tax credits were €52. So it's as if he has already paid €52. So his tax due, the tax that he actually has to pay, is €208.90. Take away the bit that he's already paid, which we said was €52, which gives us a tax due of €156.90. So that's how much tax he has to pay each week. Okay, so his 830 gets split into 635 and 195. 20% on the lower amount, 42% on the higher part. These are the tax that are due. Add them together, we get €208.90. And then we take off his tax credits, €52, leaving us with €156.90. Okay, I want to talk about universal social charge now, commonly just written as USC. The universal social charge is a bit more awkward to calculate because the universal social charge is split up into 3 different bands. So just like our general tax is split into 2 bands, the standard rate and the higher rate, universal social charge is split up into 3 bands, and it's generally given to you in a table in the question. So something like that. The table will look fairly much like that, and you will be given this table. You won't be expected to remember any of these numbers. So basically what we're being told is that everything you earn up to €10,036, you will pay 2%. Or if you're looking at that on a weekly amount, if you earn up to €193, you'll pay 2% of it in USC. And then everything above €193.01 but below €308, you'll pay 4%. Or yearly, everything from €10,036.01 up to €16,016, you pay 4%. And then everything you get in the year that's above €16,016, you'll pay 7%. Or if you earn over €308 every week, the part that's over €308, you'll pay 7%. So that's how the universal social charge works. So let's do an example of that. In this example, I'm not going to be calculating income tax. I'm just going to be calculating the universal social charge. So we'll use this table here as well. So we have a woman who earns €57,000 every year. So that's her annual salary. And we want to know how much USC is due. So her €57,000, she's earning quite a lot. She's earning well more than the €16,000.16. Now that doesn't mean she pays 7% of the whole 57,000. No, she's allowed split this into 3 parts basically. So her €57,000, we go up to 10,036, and that'll be at 2%. And now everything between 10,036 and 16,016 gets charged at 4%. So that's going to be €5,980. And then everything above 16,000. So from 16,000 up to 57,000, how much is that? That's 40,984. Okay, so that's going to be charged at 7%. So that's how her USC is working. Everything up to 10,000, she pays 2%. Everything between 10 and 16, she pays 4%. And everything above the 16,016, she pays 7%. So let's just calculate that. 2% of 10,036 on your calculator, that's 10,0036. Multiplied by 0.02. 2% is 2 over 100, which is at decimal is 0.02. So that's going to come in at €200.72. €5980. It's going to come in at €239.20. And then 4984 multiplied by 0.07 is going to come in at €768.88. So that's how much USC she has to pay. All three of them added together. So she is going to have a total USC bill of €1,208.80. So that's her universal social charge. That's how much she has to pay. Universal social charge is just like another tax. It's to pay for different things as well. But sometimes you'll be asked to do a question where you have to do income tax and universal social charge. You do the universal social charge first, but the question will tell you that anyway. So if that's the case, it'll be one of those longer questions that's divided up into different parts. So €1,208.80, that's how much she has to pay for her USC. So at this stage, if you want to try questions on that, that's page 112. No, sorry, it's not. It's page 115 to 117. So the questions. And that's as difficult as they will be. We'll do the exam papers in the class separate, but just practice them there first before you move on to compound interest.